The Weekend Podcast on Vox Markets with Justin, Peter and Steve. Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Paddy, Pete and Steve. You all right, fellas, lads, ladies,
Hello.
Gentlemen, whatever you want to be called these days. People of non-specific genders. I don't know how. What's PC these days? It's big day today. Coming up on the podcast as well, the big day. We got Wales win the Grand Slam today, so it's going to be a big day. It's spring. You're going to win that easy. It's spring, boys, and you know what that means?
Go on.
ISA deadline. See? I want to talk about it as well, CEO Salesmen, how the Europeans are idiots and we're better off out of that bureaucratic mess. Steve falls in love with stocks even when they dump on him. Are you a gambler or an investor? The price is not the value. And of course, ISA deadline. Again, just remind that. That's always important, isn't it? Because when people start investing, whatever you do, set up a stocks and shares ISA. Rich on our WhatsApp discussion group. Paddy, apparently you got a firm agreement from him, didn't you, this week? Saying Rich has been in our WhatsApp group, which has basically started around investing for like 2 years or something. He hasn't invested. Paddy, what's he said? Is he going to start investing or what?
Yeah, I had showdown talks with him yesterday. The thing that he's nervous about, which I understand from when I started this as well, he just doesn't understand the process.
No.
So he understands. I think he's worked out which app he wants to use now, but he didn't understand the bit between getting the app and actually buying stocks and shares.
Okay.
So I said to him, just stick some money in there, and that's the first bit done. And then when we all start moaning about how we're losing lots of money, that's the day to buy some. Yeah,
essentially. Do you know what? Just keep it simple, because there's so many things to look at, so many moving parts with investing, and you get a lot of just boring old people talking about it, and they're basically fund managers and all that. Or people who want to manage your money will make it seem complex, because they want to manage your money and you get charged for it, pretty much. Yeah. But you can start off quite simple, with funds. This is why I set up the Share Pickers Investment Club, essentially, for people of all different levels to try and get started. So on that website there, you've got starting off the basics of why invest in the stock market, and then you've got to set up stocks and shares ISA. First thing you should ever do, we're coming up to the end of the tax year, and so April the 5th is the end. So you could put 20 grand into an ISA. And you could do that every financial year. And then on the 6th then, you could put another 20 grand in if you want to. Now, what you earn in that ISA...
or if you've got 20 grand.
No, I was going to say maximum allowance per financial year is 20 grand. Now, if you happen to stumble across the next Apple or something, or Facebook, and it goes up by like 70,000% in 1 year, and you become a billionaire, it's not taxable. So
I still find that hard to believe.
Yeah, so they
seriously wouldn't come after you for whatever you earn on that.
Yeah, but they wouldn't.
That's how it works, Pad.
Yeah, but do you know what?
No, but it seems unrealistic. That seems crazy, doesn't it?
Well, it's not really, because as Justin pointed out the other week, it's like we get taxed on everything. We buy, we sell, we eat. It's like,
exactly.
So say that scenario happened and you earned £1 billion and you never worked again and you just lived off that £1 billion. They'd never come after you.
No,
that's probably just for a rare occasion, isn't it?
Listen, if they don't give us some haven from tax, we're going to revolt. It's like every other part of our lives, we're taxed, from our socks to our food we put in our mouths, to the petrol we put in our cars, to the car tax, road tax, petrol tax. Everywhere you turn, you're taxed. Everything's taxed. It's like they are like they're worse than the mafia, So they've got to give you somewhere.
Children's socks aren't taxed.
Well, yeah.
Here's a question for you.
Just wear children's socks, you're fine.
Children's socks in life say, no way, I'm not wearing any clothes, I'm not eating, but I'm happy because the tax man can't get me. Go on.
Yeah, so like when I first started investing, I first did my ISA probably in about 2012, 2013. It was only 10 grand you could put into an ISA, and that's pretty much double. I say pretty much, it has doubled.
See, you're sharp on the math, Steve.
Yeah. I'm quite good at that, yeah. Why is that over a short period of time doubled then?
No, because every year there was part of the budget, they started upping the allowance. Because, of course, with inflation... real value of money goes down pretty much. So you need to up it a little bit every time.
So will that go down when the economy builds itself back up, which it probably will?
No, they never bring it down. What's disappointing?
They're stopping it grow, aren't they?
Yeah, what's disappointing? They are sort of taxing it right now by not upping the threshold, because in 1980, Steve, 1985, if you had 40 grand in cash, right, and did nothing with it, that purchasing power of that cash would now be worth 10 grand. That's inflation for you. That's why you have to invest. Because if you just held the cash, it'd be worth less and less and less every year. So pretty much they are taxing us by not upping that allowance on the ISA.
So why did it jump from 10 grand? I think it went from 10 to 12 to 20.
Yeah, no,
That's politics, that.
politics.
Oh, okay.
Yeah, the new budget, the new chancellor comes in and says, right, and I'm upping the. So when they want to stamp their feet and give everyone a freebie or something, but if you look at it in real value, probably if you look at inflation, it's pretty in line.
He's probably getting backhanders from some sort of like financial institution.
Yeah, he's probably a fund. He probably used to be he's part of the board of a fund somewhere.
well, it's because a large majority of Tory voters traditionally are quite old and pensioners and all that, and savers.
Yeah.
So the ISA's are an important part of that for them. So curries favour them, doesn't it?
Yeah,
bring it down though.
No. Well, unless some socialist government gets in, probably. But
Yes.
But yeah, so yeah. I don't even remember there. He stood up there and he said, the new chancellor, he said, "I'm upping the threshold for the ISA stocks and shares to £20,000, and it's sponsored by Harry and Larry." I'd love he said that. Yeah. So listen, I said. Let's get ISA. If you want to start off, let Rich need to join the investment club, and I'll walk him through it. Discord, our chat group, is very friendly. It's very helpful. Lots of people in there who can help you. I can help you. So so that's the whole point of setting up the club. It's for people who are starting off and a bit more experienced, who are learning a bit more and finding their ways, trying to find a strategy. So that's what it's all about.
I do remember that process though. I remember my first. It took me a long while to get to.
Yeah.
Owning like a one and then two different stocks. I just didn't understand the whole thing. I didn't get what was going on.
It's like when I went on holidays, right, a while back to Turkey, right? We went to, it's a good analogy. We hired a boat, right? And you can go out in the sea in a little boat, and we met some friends. Met some friends around the pool, and so we're on the boat, and it was lovely. We're on the river, and the river's gorgeous. And then you could jump off the top of the boat. And my younger son did it, and their friend's son did it, who was also Molly's age. But Fred, the older son, got a bit scared, he wouldn't jump off. And I was doing somersaults off the top, but it was about 15 feet high, 20 feet. And Fred took him ages to get in there, to just do it, Fred. He was down and he walked away a couple of times. Just jump. It's okay. Once you do it once, we're fine. And that's the thing. Once you jump it once, you buy a stock shares once, you do it again and again. It's the initial leap. Just make that leap. A leap of faith. It's fine.
Did he do it?
Yeah, he did do it in the end, yes. And
okay.
So make the leap of faith.
As Monty own.
Yeah, make the leap of faith into your ISA. That's what I'm saying. That's what it is. But do you know what I want to say, though, right? I before we get into stock shares, Europeans. What is going on there? What is going on there with the AstraZeneca?
What's a bit of a tangent?
They banned the vaccine, the AstraZeneca vaccine, because some old French lady stubbed her toe or something, right? And it's just ridiculous. What a bunch of idiots. Who do they take advice from? It's absolute nuts. So they've had these blood clots, right? Which in a normal population who hadn't been vaccinated, you'd expect that amount of people to have blood clots anyway. It's like, if people are getting pregnant, they could blame it. I can imagine. I don't understand what's going on there. How have they got into such a mess?
Politics.
They're way behind. I know they're way behind on the vaccinations, right? And they got some French guys who, I can't do a French accent very well, so do an English one.
Go on, go for it.
Yeah, this is a little sketch here. So laugh at the end, yeah? I had the AstraZeneca vaccine.
You've written this?
No, I haven't written it, just off the top of my head. I had the AstraZeneca vaccine. I came home in the afternoon, and my goldfish was dead. Now, I spoke to my neighbour. She had the vaccine last week and she found a dead pigeon in her garden. I think we should do a deep investigation of the AstraZeneca vaccine. Is this a coincidence? I don't think it is. I think the AstraZeneca vaccine is killing everything. But that's the level they're at, isn't it? That's how stupid they are.
Your French accent.
Well, you can do a French accent, Pete. Make an excuse up for why you should ban this and do the French accent. Because that's how ridiculous they become. There are people becoming pregnant while taking the vaccine, but there's no connection to that. It's just nuts. Anything can happen.
I think it's even worse than that, isn't it? I think that the actual cases of blood clots are less than in the normal
that's
population.
what I read. So apparently,
if you're going to draw a conclusion, you should probably draw the conclusion that it's preventing blood clots.
But I'm just thinking, are they seriously, if the politicians are doing this on a political level, they're killing people just to say, no, the English, they've left Brexit, they're not doing better than us. No way. No, we're banning it. Ethel has hurt her knee after she fell over. Joe Biden fell on the steps. That's why. Any old excuse they're trying to come up with. Look at the facts and the data. This is an opinion. See, opinion is very dangerous. When I look at ITV sometimes, you know that Piers Morgan's gone. He had an opinion. He was quite good at that opinion thing, though. He was at the moment. They're on there. They just get a lot of politicians on there or journalists say, right, let's talk about this. I thought, why are you talking about it? I don't care what you think about it. Give me some facts, but I don't want opinion.
How many cups of coffee have you had today?
None. I don't know what it was. Do you know what it was? I normally have a couple of drinks on a Friday night with the wife, but it's a big night tonight, so I'm going to hold off. And I watched Steve on his DJ decks last night, and I'll hold off and have a few drinks tonight because, of course, Wales is going to win the Grand Slam, and that's worth celebrating. You know. So
this is you on a Saturday without alcohol.
Yeah, this is why I'm pepped up. Anyway. Okay, so here we are then, right? Let's get into stocks and shares a little bit. Are you a gambler or investor? Right, I saw that. Do you see that gamble that guy did at Cheltenham? And I cover this in my first lesson on the Investment Club. I say basically why gambling and investing is different. You can sway the odds in your favour with investing. You can't in gambling. All you can do is put less down on the bet. That's all you can manipulate. So if you want to put 10 quid or 5 quid, you can only change that part of it, you know? Everything else is out of your hands, pretty much. So Paul Dean, he was going to win 500,000 from a 5 quid bet. If his red-hot favourite, Envoy Allen, wins the final leg, so it accumulator. And it was 4 to 9 on. Envoy Allen was 4 to 9 on. So that means put 9 quid on, so it was odds on.
9 to 4 on.
9 to 4, yeah. So if you got 9 quid on, you get 4 quid back if it won. So normally it's the other way around. So and someone on Twitter said, it'll pee it. Easy. It's hot favourite, red hot favourite. And someone said, well, you can cash out for for $250,000. So he'd win 500,000 or 250,000 if he cashed out. And I said on Twitter, would you cash out, you know? And I think the replies were 91.4% said yes. 8.6% said no. Now, I'm assuming they're taking the mick there, playing around, because why would you even try and gamble that? Could you understand that? I mean,
I was one of them.
You really? Yeah, for a laugh. Because listen,
genuinely, I would have kept it.
Are you serious? No, you wouldn't.
Why would you risk that? Okay, this is the maths of it. Why would you risk, right, a 4.9 million% gain from the 5p? You got, that's up to 250 grand. That's how much gain he's had so far for just 104% one. So you're talking about a 4.9 million% gain. You've already got that. It's in the bag, but you're risking all that for 104% gain. See, that's we have to weigh off the odds there. And what happened is he cashed out. But if he'd gone with the bet, Envoy Allen, the red-hot favourite that would pee it, fell at the second hurdle. And so,
but you could have had that same. They would have let him cash out on any of the 4 previous bets, and he would have earned more money than he put on. Like the whole point of a 5 bet accumulator is you stick with the 5 bets. Otherwise, you don't do a 5 bet accumulator.
But when does it become material? You know, that's what. I mean, the previous one wasn't. If you look at it, the previous one was like. Let me get it up because the previous one wasn't. It was a decent chunk, but it wasn't material. Was it to the? Let me go back and have a look because in the BBC they did.
Probably still was for £5 though.
Yeah, no, for £5, yeah. But when you talk about $250,000, you talk about buying. You can buy a house in some parts of the country, can't you? With that, a nice house, you know, half decent house.
Buy a whole town in Wales.
Yeah, exactly. Well, exactly. There's houses in Wales, terrace house in Wales. But how much, Steve, can you get a nice terrace house in the Rhondda for?
Oh, probably about 60, 70 grand.
Yeah, exactly. So, no, in fact, the reason why it went up is because Bob Ollinger, the one, whatever he's called, the leg before was 25 to 1. So that jump, the previous one before that was 4 to 1. So that 25% of one really lifted it up. So you think,
that was his outside bet.
Yeah.
Then he went for a favourite in the final one.
Yeah. And but then go on, Pete.
I was going to say the parallel with investing here is that, you know, on the rises. And the difference with gambling is that, like, you can cash out a little bit, can't you? Because you can de-risk as you go up, and you can stay in. Whereas gambling is always a bit all or nothing, isn't it? And like Paddy said, he could have cashed out earlier, all the way along the line. It's how risk averse you are. So you're like, I'll go one more bet, I'll go one more race. But then you get to that point when it's $250,000, and any sensible person would cash out surely.
No, I remember Gavin said to me, well, investing is like gambling. And I said, no, so many different levels it's not. Because, with a bet, you can go each way, of course, but if you put a bet on and you're racing against other horses, you don't know what drugs those horses are on, or you don't know what drugs your horse is on, but one of those horses can knock you over, and that's not the same as investing, and it's not all or nothing, like you said at the end. You don't lose it all. You may have to take a bit of a knock, but you can do your own research. And it's not a race. And also, you can take money out, put money in. It's so many different ways. And you can, like I said, in my first lesson about risk, there's so many ways you can avoid risky gamble plays in investing. The sectors, for example, oil and gas, for example, wildcat drills, that's a gamble. And also, if you're starting investing in a company that's doing preclinical or clinical trials, that's pretty much a gamble. It's odds against. And all that stuff.
Sorry. Yeah, and also in investing, a horse can fall over and actually get back up and win the next race.
Exactly. I don't know what the analogy that is.
Can't it? No, but you can crash and burn because for a short period while for some reason, some bad news, but it doesn't mean it's dead and that race isn't over. The horse can get back up and actually regenerate. And
you're talking about EUZ.
Yeah, no, I will go to that now. Listen, one other thing is that if you look at that gain, right, it's a bit like investing because the bigger a stock gets, the less percentage gain you get, and that's what I'm saying. From a small level, small caps move faster. If you want bigger returns, they're riskier, but like I said, you find it very hard to find some decent businesses, growing businesses below 10 million market cap or 20 million market cap. But once you find one, it's like mining diamonds. Every now and again, they'll get little bits here and there, diamond mines, and every now and again, once every couple of months, they'll get a decent-sized diamond, and that makes up for everything. And that's a bit like micro-cap, small-cap investing. Once you get that one, it'll transform your portfolio. But there's a lot of rubbish down there. But if you want big growth, a big reward, you have to take on a bit of risk. But then you can manipulate those risks, and you can do that just by doing a bit of research and not investing in certain areas. Anyway, do you know what? Yeah, talking about so this week, Steve on WhatsApp, come out of the blue, said, "Now I'm at an all-time high." Party emoji. Also, a good few days for EUZ. Yes, Justin, I still hold. I thought, what? You still hold? European Met? What, Steve? What happened there? I thought you should dump that anyway. What happened? I don't understand. Why do you still hold that?
No, I'm Team Lawrence, so I'm sticking there all the way.
I don't think even Team Lawrence is Team Lawrence.
No. Yeah, do you know what? It's just one of those ones. I got stung quite badly on that. I put quite a bit of money into it. And every now and then there's like randomly out of the blue, there's a spike happens and I'm just waiting for that next significant spike. And then I'll sell. Well,
I would say, do you know people make most mistakes, right, investing?
Investing in EUZ, yeah.
Well, no, they buy high, sell low. Because the reason why they do that is because the fear of missing out and the noise around a stock is at the loudest when it's high. Because everyone's shouting about it. I'm up 120%, 200%, and all this. Everyone's shouting about it. So, and it's going to the moon. And that's why buying low, sell high is very hard. Because the psychology is flips.
But I did buy at the right price. I bought at the same time as all you lot did. But for some reason, when it hit about 95% in profit, you all kind of took profit and I didn't. And then, the story from there.
I lost thousands on that.
Okay, well, Pete and Justin made profit on it. And it just fell off a wall overnight, didn't it? And I just sat there. Yeah.
Well, do you know what? You criticised me, right, for my strategy and tweaking it and all that. But but the boys did. Pete and Paddy had to go on WhatsApp this week.
Oh, there was no criticism.
The new strategy. I said, no, listen, it's easy to veer off course a little bit. As a skier, it's easy to go off piste, but do you know what? It's a bit more fun, maybe. But
it's a clear decision.
It's a bit more fun, but you can get hurt there off piste if you don't know what you're doing. But every time you take a hit, you've got to learn from it. That's the lessons you learn in the stock market. And one of those things I learned was, as you know now, I don't do resource stocks. Why? Because they're nowhere near cash generation, real value generation. That means they're pop and drop. And you can hang in there, Steve, and they will pop. And it can pop massively. And it can pop for not only a day, but a couple of weeks. But sooner or later, if they're not generating real cash, where are they going to get the cash from?
Have they actually done any drilling yet? Are they still faffing around?
They've drilled about several holes. There's stuff down there.
Yeah. I totally agree with you, and to be fair, I'm the same. I'm going to get out of resource stocks, like United Oil and Gas. I'll get out of that at some point as well soon.
Yeah, but hang on, that's a bit different.
No,
I know it's not the same thing, but
don't lump them all together under this umbrella of resource stocks, because not all resource stocks are born equal.
No.
But my point is, I'm just waiting for that, because we all know UZ will have a pop day, because it has them quite regularly, and when it does, I'll cash some money out. So, and I will take a loss on it, a hit on it, no problem. But at the moment, I think I'm about minus 69%. So I'm just going to wait for it to pop.
Stick with it.
Yeah, just do a little 20-30%, and I'll take the money out.
Yeah, but do you know what? See, this is where we have to try and draw a line of distinction, right? And I try and point this out. What is it on the reward video? There's two different ways a company gets money. Only two different ways, pretty much. And one is they generate cash from their operations. That means they make a profit. All right, and that means there's cash. There's a margin between what the costs are to make a product and what it is to sell it. There's a margin there, and that is a profit, and that goes to the bottom line, and that generates real cash. That's real value. That's sustainable value. That's why share prices will rise for years and years and years. They keep doing that without dropping. There's no pop and drops. That's sustainable value. Now, if you're a company like a resource company that's drilling, there's no revenue. They can only raise money by loaning it, or by equity or convertible loan notes. So and that's generally dilutive to shareholders. So if that's going to happen now, that's why when every resource company pops massively, you can expect if you check the cash balance, but you can expect them to do a fundraise sooner or later, because they're always going to need cash for a long time before they get to that level where they are. Most of them won't. I had a guy on CEO saying a resource company said only 3% of resource companies will get to the point where they'll be producing real money. Because it's highly risky, it's raise a lot of money. Sometimes commodity prices change, and it makes it less favourable for banks to loan to them. So it's all different reasons, but it's fine. If you want to do resource stocks, you can earn good money, but you have to trade it, because they'll pop, they'll do a fundraise, it'll drop, and it's news driven. It's not value driven, and there's high potential.
You also, I guess, with them, you also have to watch out for the fact there's probably lots of people who also got burnt, no?
Yeah,
so
no, exactly.
They're probably just sitting there waiting for whatever that percentage number they've got in their head is, and so when it hits that point, everyone's gonna. What was the latest? What was the fundraise where we got in? It was like 15p or something, was it?
For what?
With that, I can't remember what the price
I don't
was,
know.
But there was one number which I think everyone got involved in.
They consolidated,
so if it gets above that, then maybe everyone will suddenly sell, and it might just go through the floor again.
The share consolidation. I don't know what the old money was now, but the new money is what are they at now? 15 pence they're at now. So but look at the last spike. There is there. I'm not saying they do it now. You have to check their bank balance. But if you look recently, Steve, it popped to from 9 pence or 10 pence to 16 pence, which if you're a trader, that's good,
Yeah, I'll do that. I'll take that. It did about 2 years. In fact, that was probably and I should have cashed out then, to be honest. But it just kept going up and up and up, and I was like, I'll ride this for a bit, and then obviously I didn't put a stop loss in, and it went back down again. So here we are, still.
Yeah. So 12.75 now. So it's gone from hit 16, come back to 12. So it's popping up because there are a lot of traders in there, and it's a small cap stock. There's also the added complexity. They need to raise funds probably sooner or later. They will. I don't know when, but they will need to do it sooner or later, because they haven't got. So they're not generating cash. So where do they get it from? I'm gonna
dig it up.
If I can get 50% of my money back, I'll be happy. Well, I won't be happy, but I'll be semi-happy.
Semi-happy.
Yeah, that's better than me. I sold at 92% down in that.
Oh dear.
Sometimes, right? That's why you change strategy. So what I learned from that now is I don't go for companies that are not generating revenue or not close to generating real values and profit. Are they cash flow negative or positive? That's what I always look at that now, because that's why I'm comfortable putting bigger money in companies that are generating, because they're not going to be pop and drop. They're going to be less volatile. They'll be a little bit volatile, but they're not going to be like resource companies will do. Could do 100% in one day and then come down 60% the next day. I don't want that. Because like for like, net for net, a lot of people, it's a false economy, are losing money on these. They see the massive rises, they don't see the massive falls. And so I prefer a more steady rise, wouldn't you? Less of a sort of sex, drugs, and violence rise, and just.
I'm comfortable having a proportion of my portfolio exposed to the resource stocks, but be it 10, 15%, something like that.
Yeah.
have a little fun corner over there that has that kind of up and down. But they're good resource stocks, not perhaps the likes of these.
Pete's fun corner.
Well,
yeah, fun corner.
What's in your fun corner, Pete?
Let's have your fun. Let's look at what's your good resource stocks, then, Pete? Look at drawing a distinction between him and Steve. Mine are good resource stocks, Steve. Yours are trash. Right.
He's already mentioned.
Just talk about United, aren't you?
It's a good one.
Yeah, United Oil Gas, they are generating. I don't know if they're cash flow positive. I mean, they're generating revenue, but are they making a profit? I don't know.
They're
but
producing. Their timeline and Brian and the team, are sticking to what they're saying, and they say what they're going to do, and they seem to be delivering. So I'm sort of happy just following that, and the share price is being reflected in that.
What else is in your fun corner, Pete?
What else is in my... Well, we talked about it last week. Predator, I still own a bit of that.
Nice.
What's happened there? Has that come down or has it gone back up? What's happened there?
No, it's gone back up. It's above the placing price.
Is it? I've got to say, there's a lot of... I can see a lot of positive sentiment to it. Oh, hang on, it's rolling over a little bit.
Didn't they have some weird loan notes going on or something for a long time?
Yeah.
Is that all cleared now?
Yeah.
No, convertible loan notes. Yeah, that was there. But the...
Pete admitted he didn't know anything about it last time, so someone asking him about in-depth loan notes.
Yeah, exactly. I don't know the whole story, but my stop loss that kicked in last week. If that hadn't, I'd have a bit more money at the moment. But anyway, I've still got a bit of a holding there. And Asian Met's my other resource stock.
Really, still got that?
Of course.
I'm with you.
Fine.
Yeah, I'm not with you in the stock, obviously, but yeah.
That's all right. That's fine.
Yeah,
One day that'll be 10p, and I'll be like, "See, told you."
Maybe you won't sell them,
I gave up on that.
Yeah, me too. Again, you got to move on. Sometimes take the loss, take the hit, move on. Consolidate your portfolio. Don't dilute your portfolio. Again, is share dilution, but there's shareholdings dilution. The more you have, the less risk you have, less reward you have, though. But by the way, one of the guys on the Discord group recently. I don't know if you saw FUM. No, where was it yesterday? I think it was one of the big rises yesterday. FUM, I think it was. Did 100% in a day. But he said he held on for ages. And at last, it's pulled off. And he sold it. It went up 155%. Yeah, Futura Medical. They had some kind of news out. A European sort of, received recommendation from the medical EU notified body. But anyway, one of the products there. But it went up. But he said he sold too early. He said, "I gutted." He said, "I held that for ages. I was in loss. It went 155%. And I sold it too early." And I said, "What do you?" I said, "You can never guess how high a stock will go." But in that situation, I said, "What can you learn from that?" And all you can do, stop loss. I mean, when you get a company that's got a stock that goes completely berserk, don't limit your upside. By selling, that means selling where you think it's going to stop. You never know where it's going to stop. So if a company goes up by 50%, don't sell straight away. Put a stop loss in, so you'll bag that, sort of 45 or 50 or 40%. So you're happy to come down 10%. But then watch it when it's on a berserk day like that. Move it up a bit. If it goes up by 100%, then move it up to your stop loss up to 80%, so you can have 80% profit. So that kind of thing. Just do that because you shouldn't limit your upside on that. Because I've seen companies in the small cap arena go absolutely berserk. I think it was it independent oil and gas once went up to 600% in one day. And I remember talking to Malky on the podcast. I said, "Look, it's gone up by 105%." I said, "I wouldn't get in here." They went up by another 500%. So if you sold at 100%, it's brilliant. It's good return, yes, but that's the whole thing with stocks and shares. The downside is limited by 100%. You can lose 100% of your money. But the upside is unlimited. Theoretically, it can go on forever. So don't limit that upside, because all you need is one of those, and it can transform your portfolio, and it can take your portfolio from a loss maker to being profit. So don't limit the upside, guys. That's what I'm saying. You know what I'm saying?
Yeah. Absolutely.
Anyway, what's that? Do you know what I talked about then? You were talking about Brian and the team. I want to talk about CEO Salesmen. On Twitter, you can accept that there are people ramping stocks. They generally will not have their real name or real picture attached to their profile. They'll be ramping like crazy, but they can do that because they're not on the board. They're not in the company apart from holding. They want to sell their stock at a profit. So don't believe everything you see on Twitter about this is going to the moon. But when a CEO does it, be careful, because they are meant to be bound by certain sort of regulatory sort of guidelines. And I'm not going to say anything, but if you listen to the podcast this week, there's a CEO on there really using the adjectives, massive, huge, significant. He said that several times. And I think be careful of that, because a CEO should be 80% substance and maybe a 20% salesman, not the other way around. And in fact, we know this CEO, boys.
Did you actually mention this CEO just like literally about 30 seconds ago before you started saying that?
No, not Brian. Brian's very measured.
Okay,
Brian. Not Brian from the United. No, Brian's
okay, Steve.
Let me just clear that. Let me clear
this.
that. I thought Brian's been understated several times when he came on the podcast before, considering the potential, and he understands the risk though, and oil and gas.
Significant.
I think he's been but there's been on this week on the podcast been a CEO who said massive several times. He said huge quite a few times. This is about the potential of the company, and yeah, so be careful of that because
don't tell us the name of the CEO, but what's the company?
yeah. But we've had previous experience with this CEO, and the company went bust. Went pop. So and he was equally bullish then. I'm not saying he's not right this time. He could be right, and it could be the last time could have been unfortunate situations and all that. But be careful of ramping because they shouldn't be like that. Really, they should be a bit more measured. And in fact, so do you know who's super measured? Is like Richard from Polarean. I wish he'd be like a bit more rampy. I'm trying to drag it out to him. He's very scientifically based and very measured. Richard, just tell us me a 50 bagger,
Richard, let loose, Jesus.
I know.
So what's the deal then? They've announced their corporate action, haven't they?
Yeah. That was good. Listen, this is a company now. It's pretty much pre-revenue. Right? It's a small bit of revenue, but compared to their market cap, it's not a lot. They raised 25 million at a less than 8% discount. One of the biggest backers they have came in as well, followed their money. All directors pretty much followed their money. That's good. That's what's called a good fundraise. People say, what about placings? It depends. A placing is different animals, there's different things. I mean, certain placings are very good, like that now will... in my mind, there's no reason to sell Polarean now. If you're going to sell it, maybe sell it on the day they announce the FDA has passed them for commercialisation, because that will happen. They get passed pretty much, I think. And but the travel and sentiment is now. Now is the positivity will start building. You may see a bit of churn in private investors took the place, and maybe I don't know. But I mean, this will start generating real sentiment, and I think it'll really start to move upwards towards that date, which is October the 5th. That's the PDUFA date when the FDA will say, the man from FDA, he say yay. When they say that, right. I think...
let's hope so.
So the uncertainty was this. Everyone sort of knew they needed to raise a bit of cash, pretty much. We looked at it before that date or close to that date. But they've done it now. So that uncertainty is removed. They've got 25 million big ones in their back pocket,
and they've got it's an open offer for existing shareholders, isn't it?
Yeah, it's 1 for 50. I mean, I've got enough anyway. I mean, it's like once every 50 shares you hold, that just shows how much oversubscribed it was. They didn't want. It's a nod to the private investor, but essentially, institutions wanted a lot because they see it as mark my words, this is a potential. And I say this, you can look at the figures. It's a potential, £1 billion plus company if they do. And I don't see why it doesn't, because their system is better. It's more efficient. It's more accurate than any other system out there. And did you see what Richard said? There are 40 million people in the US with probably lung conditions every year, and he said that's just gone up by 25 million because of COVID, long COVID. So their market just got literally 50% bigger. And no other machine could do what they do.
What sort of percentage of your portfolio is Polarean?
I think about 10%, something like that.
Yeah, I'm about the same. Yeah, okay.
But
I'm a lot more.
Yeah. I think it's one of those ones, honestly. I remember a while back, I had you underwater, and I said, don't sell it now, honestly. It's one of these companies that can transform your portfolio. And that is, genuinely, I don't know anyone, people from... for example, Alexander Vadim from SP Angel, head of healthcare there, he used to say he holds it. I mean, he won't talk about it anymore because they moved broker to a bigger broker, and that was Steve Feldman. Listen, they're going to listen to the NASDAQ. That's. I try to get Richard to say that on the end of the podcast, and he did pretty much say it, but he won't say it in that way. Yeah. The reason why we're without a broker is that because they're in America. Polarean are based in America. Most of the systems on trial in clinical surroundings are in America. Now the broker they've got has got a big American operation. It's a big broker, and if you look at the fundraise, right, every fundraise they've done has gone up in price, up in value. That is what's called a successful business. People don't like fundraisers, but as a CEO, you just point at the chart of what they raised and you said, look, every time the fundraise has been bigger and it's been at a higher level. And people, new investors, big institutional investors, are encouraged by that. That's what they want to see. Because they want to know if they put money in now, will it be higher in 6 months' time or 12 months' time? And they'll follow their money, you know?
And the thing is, you're talking about the potential of it being $1 billion market cap. Well, you know, that's a 10 bag from here. It's around the 100 million now, isn't it? So, I know what you're saying, you've got enough, whatever, and I'm looking at my exposure, it's 10%, and I'm thinking, well, I could put a little bit more in here, I think. Now it's come down to around 60p, or I could take up the open offer.
Well, you know one thing, what's the worry here, right? Well, small cap stocks, right, with no revenue or little revenue, the biggest worry is cash. They've got no worry for that, right? Now, what is the rest of the worry? The rest of the worry is that they won't get FDA clearance. I don't think that's going to happen, you know? It's like, it's past phase 3 trials, it's safe, it works, everything's there. They just have to go through the formal, you know, rubber stamping, what do you call it? Stamping past the FDA. And it takes a long time to do that. And they couldn't fast track it. They weren't allowed to fast track it. He said the FDA are not allowed to fast track it because it's a head-to-head clinical trial. To be fast tracked, you've got to be brand new in a certain field and a novel sort of drug or device that's never out there before. And then they'll fast track because we're just a lot better than what's out there at the moment. So, but everything on every level, it's like MRI. Do you see with the normal clinical trials? If you use the normal, I don't know what spirometry, the stuff that's used at the moment, they only need 524 patients to get the same kind of accuracy as Polarean get for 24 patients. Yeah. And that's the difference in price and everything. It's not harmful. So to me it's nailed on. It's one of those stocks. It's a big stock, but it's still got massive potential. And I thought there's no way. And I look at it and sort of go. I know that it obviously has risen from where we were buying around 25, 30p, whatever. I think 19p was when we started buying. But even now and even after that rise, when we talk about the potential, and there's always that tendency to sort of look for the next new thing, the next new company. And of course, it hasn't had a big move yet because there's obviously a big gain to be had. But at the same time, when you know the story, you know the stock, and it's getting better all the time, the more I think about it, I go, well, it's an opportunity to average up because you're actually you can. Well,
as more information's become clear, because it was that big investor got involved as well, didn't they? The one who probably ended up buying them.
Bracco, So Bracco, if you look at Bracco, right? They've got 10,000 employees and ridiculous. They turn over billions. They're in that area, diagnostic analysis, and all that stuff. They bought the current chairman of Polarean, who's got skin in the game. He had a Blue Earth Diagnostics company, and Bracco bought that for 450 million, and Polarean's kit has got wider applications, a bigger market. So you can see even on that benchmark, and the fact that the chairman's got a chunk of skin in the game, Bracco's got a chunk of skin in the game. Richard has got, it's not much now, but he's got over 1% of the company, which is what's that? It's over £1 million, isn't it? So it's meaningful.
Yeah. So can I add to the weekend podcast vocabulary here and call this an opportunity?
Yes. Yes. That's not as good as Pete, do you know what you are really?
An idiot?
In the sayings.
A wordsmith.
I was going to be a lot less kind than that. But you are like a one-hit wonder that has a couple of other hits, very similar. Very similar to the first hit you had, but not as good,
leave that now, Pete.
Like in Mel and Kim, something like that. The first hit was big, and then they came out with a couple of other hits. From the Stockake and Waterman Hit Factory, and
Mel and Kim. That's such a random song.
It's a good song, but it's very similar to the last, but not quite as good. So
what was that song they had?
I don't know. Steadfast for the weekend.
That was a great tune.
Yeah, but the rest. Can you name the second hit they had?
Respectable.
Respectable was the first one. Respectable was the first one. Respectable. But what I'm saying is the Drop Opportunity was a cracker. Now, the spin-offs...
Don't worry. That's the other one.
Yeah.
Was that the one after her sister died? Or was that the one
Yeah,
before?
no, it was the one... Okay, well, I believe it there. Sister died. That was very sad, wasn't it? Twins. And Mel or Kim, I don't know which one it was, but one of them passed away. Anyway, let's move on. Thanks,
Paddy brings the tone
Thanks
down.
For that, Brad. Yeah, it was a nice poppy sort of reference there. Paddy brought it down with death. Yeah. Anyway,
so we're saying that the spin-off from Drop Opportunity... Opportunity.
Opportunity.
It's an opportunity.
It sort of works. Opportunity. Yeah, maybe.
I think it's going to get confusing, Pete. I think you just stick with your bestseller.
Yeah, I think you're dilating your brand there, Pete.
Yeah.
My opportunity brand.
Maybe in terms of your like you've got your fun corner with high risk. Maybe this is a lower risk corner, like a I don't know what the word would be.
Boring corner.
So can I move us on, guys, to Trufin? I like Trufin a lot. And somebody said to me, hang on, your strategy is like sub 20 million, you're looking around that level. And I've gone off piece for that, and I've gone up for bigger companies. And Trufin, people said, well, that's now 62 million. That's not in your strategy. But hang on a sec. There are 4 companies in Trufin, right? 4 fintech companies. I think 2 very exciting, 1 very good, 1 bit boring. And they are valued, they've got about 15 million in cash. So take the cash off, and you've got about, 50 million less than that in market cap. So excluding cash, the companies are worth about 50 million. So divide that by 4. That's pretty much
still over 10.
It sounds like you're bending your strategy ever so slightly.
No, but that's it. If you look at the last release, we're looking to sell to those companies. So what happens is they sell those companies, they return cash to shareholders, which they do, and the market cap goes down. But the two. But listen to this now.
But also, those 4 companies aren't equal, so I wouldn't say it's not 50 divided by 4.
I know that, but listen, but I'd say PlayStack or Satago on its own is worth the entire market cap of Trufin.
Yeah.
So
if you squint, it's less more. It's worth less.
Turn your head to the side a little bit and put some glasses
hold
on.
The numbers far away, they're smaller.
No, but listen, right? So it's 4 parts of the business, right? There's the exciting one, I think, which is PlayStack, and there's also Satago. Oxygen is very good as well, and Virtus is a bit boring, right? So PlayStack is a game publisher. It's like, you know, whilst that Big Stack was valued at 80 million when it really popped up, right? And now it's worth, 25 million? Now, PlayStack, right, it's got a hit game. It's got lots of hit games, but there's a big one. They've got Doctor Who game. They've got lots of games. They're a publisher. They're also they fund for new publishers. And so they get equity in new games pretty much by funding that. There's all different parts of it. But what's exciting is they just released Mortal Shell, which they own 100% of. It was a hit.
Oh, I love Mortal.
It was a hit. What's it called? What do they call it? First person killer. Well, I don't know. First person FP combat, FP whatever. But it's a big hit, right? It's a massive hit. It's double the revenue of the company of Trufin. They're going to come out with it's won quite a few awards for best new game. They're going to do Mortal Shell 2 probably, and I didn't understand the dynamics of this, the economics of this. Apparently, the hardest bit is going to hit, of course, because there's so many games out there. Once you get a big hit on your hands, then the franchise kicks in. See, Pete, it's unlike your franchise where you drop toonies and stuff. It can get stronger rather than weaker.
Just like Mel and Kim.
Yeah. So because obviously before Mortal Shell existed, there was no fan base. Now there's an installed fan base already waiting for Mortal Shell 2. Spread the word. So that'll get bigger and better. So the revenue from Mortal Shell 2 will probably be a lot better than Mortal Shell 1. And they've also got this starting to. That's not only that. It was signed up by Epic Games, which is. Like, if you know anything about gaming, I only know it from my kids. Epic Games is the biggest gamer around at the moment. It's the owner of Fortnite, and of course they're earning billions. And so that's huge. But also they're just about to incorporate within their games something called the Interact platform, which is basically Big Stack Tech. So they've got hit games. They've got a suite of hit games that they've got a fund. And they're about to install this. This is one part of the business of Trufin, right? They've got 15 million.
Is it actually Bid Stack Tech, or is it similar?
It's similar. But I mean, so that's not unique at the moment. There's a lot of companies now doing that, inserting brand, appropriate sort of stuff in games. But they've got that in their games. Then they've got Satago, which is a different part of the business. They own 100% of these. Satago, basically, it helps small and medium-sized businesses get their invoices paid on time. And that's essential for small companies. If you haven't got cash flow, you could die. Now, they've just done a trial with Lloyds. Lloyds is the biggest bank in the UK. It's the market share is up at, say, 24%. Next one is Barclays, below 15%. They've just done a 6-month trial with Lloyds. This is going to go ahead because you don't put that software in and just try it. And if you read the release on the trial with Lloyds, the guy from Lloyds doesn't seem like it's trial at all. He says, this is Ben Stevenson, he's the MD and head of invoice finance, ABL at Lloyds. So I'm delighted to partner with Satago in order to rapidly launch a best-in-class digital working capital solution for our clients. The proposition will help deliver critical funding and digital tools to small businesses in the UK and help them to navigate a challenging external environment. Now, it's a done deal there, because once if you look at the stats as well, 78% of reduction in unpaid invoices over a month when you use Satago compared to not using anything else. If you're a small business, you can't chasing around invoices. You've got lots of things to do. You're spinning lots of plates. You just get a bit of software in there, and Lloyds
send like angry emails.
Yeah, it just automates everything, I think. But the stats are amazing. But it was growing anyway, organically. But if Lloyds comes in, it'd be massive. So you got PlayStack and Satago, and already Satago's almost break even. And then on top of that, you've got Oxygen, which works with, it's a very similar thing, fast-paying invoice thing for governments and more sort of public sectors.
But do they white label this? And
the Satago one would be white labelled, yes, for Lloyds. Yeah.
Yeah, right. Because I was going to say, other accountancy packages out there on the market kind of do this stuff that SMEs can use, but Lloyds would then, this is the service that Lloyds would provide, and this is the tech that Lloyds would use. Yeah.
Yeah.
Okay.
And if you look at Lloyds has got itself. It's got 30 million customers, 65,000 employees. It's like, that's a massive market. That will literally, I don't know what, tenfold the sales of Satago. It's obviously lesser cost for them because it's white label, but the amount of volume they'll get from that will be phenomenal. And then you've got Oxygen, that's the market leader, right? Different part of the business, market leader in this public sector finance and invoicing thing. And they've got 5-year contracts, 94% client retention, 90% contracted revenue, recurring revenue. So this is what you get. You can multiple the value of these companies. When you've got recurring revenue, you've got foresight. You can see what's going to be earned 5 years down the line. That's why companies with recurring revenue are valued a lot more highly compared to people without recurring revenue. Because if you're a business that's every year go out and find new clients all the time, it's hard work. If those clients like recurring every year and they just add to the top of it, it's like, and they are EBITDA profitable now, Q2, Q3, Q4 2020, that's Oxygen. And then you've got Virtus, which is the boring part. But again, Virtus is on target. It's a loan book thing. That's exceeding its target for loan book. Every part of this business is now at inflection point and getting better, and yet it's valued at, excluding cash, 15 million. There's 4 companies in there, and I think literally can be huge. And not only that, the group is fully funded to achieve profitability. I mean, there's only one issue.
What's the CEO like?
James, he's a lovely guy. Yeah, James. He's a nice guy.
There's a man there. That's terrible of me.
Yeah. No, well, you can assume. Going on stats alone, you can assume that, though, can't you? Yeah, it's a good bet. Odds on, because if you look at stats, what is it? 90% of CEOs are male. So.
It's rubbish, isn't it? We should do something about that. I'll send an email.
Yeah, okay. James is a good guy, a nice guy. And now, James used to work for a company called Arrowgrass years ago, right? Which was a fund, right? Now, this is the thing. This is the twist in the tail, guys. There's going to be opportunity here, okay? Because Arrowgrass still own 20%. They held 75% of this company recently, but the fund shut. It went bust, whatever, and they had to sell the shares. They placed 54% of those shares with other institutions, brokers and all that stuff, at 45 pence. They've still got 19.99% left. People are worried about that because it's a big chunk. I don't think so, because first of all, there's an NED, a non-executive director, from Arrowgrass on the board of Trufin. James, like I used to work there years ago. There's a good relationship with them. I think the rest of it get placed, but at a higher level. They could have placed a lot at 45 pence, but I think they wanted more money. So I think they've got a 90-day window where they have to sell it via an orderly market to kind of dump stock. And then after that, which is May the 5th, I think, they can dump the lot if they want. But a month after that, within a month, we will hear whether the trial with Lloyds is successful and whether Mortal Shell 2 is coming out, probably. So I'm thinking they wait till the share price goes up and they place the rest with another institution in an orderly way. That's the way I'm seeing it. So I don't think there'll be a lot of... I mean, there may be a little bit of discount, but it'll be with institutions that'll hold it, So, So I like Trufin. It's in the right... There's like 4 fintech companies. So one gaming company is booming. 3 fintech companies that are successful. And in fact, one of the shareholders, very interesting, these guys, is called Watrium. Check out these guys. They are basically the Norwegian family office, the Royal Caribbean Cruise Line, and they are old money. And they hold stock. They own 21% of Trufin. They hold stock for generations. They just want to they don't want to sell anything. They do due diligence on something, and they want to hold it forever. and they want to just pass that down.
They're like Steve.
Yeah, exactly. Yeah. Like Steve, exactly like Steve.
Good tactics.
Yeah, yeah. So I think it's an interesting company. Check it out. I think inflection points, everything's going well there. Just got a bit of. They're not shouting. I didn't hear about Trufin. They're not shouting about it because they've still got this Arrowgrass thing that could be an overhang. Yeah. So they don't want to shout about it. But once that's cleared, and you've got two big news events coming up, like in Lloyd's and the other thing, it could go very, 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 very well. I think.
So what percentage of your portfolio is this now?
I didn't go big on it really. I mean, I did 10% pretty much for it. All of them are pretty much apart from a couple of companies. I'm overly Escape and I'm over that, of course.
It's volatile this week, isn't it? Hey.
Yeah. But do you know what I was saying on the weekly webinar? On the weekly webinar, I don't see the reason why I did my last video on them, a £1.50 roadmap. There's a roadmap there. Name another company that's generating cash, right? It's very low. It's very low risk because they've got cash. They're going to be generating cash now at 17 sites. Okay, they've got a roadmap to 50 sites, so you can plot the value increase with every site they open.
Map, is it? Is it just a map?
Well, it's not a map, really, but it's sort of a map because their sites are over a map, aren't they? But so name another company where you literally plot out every site that they add adds like 3 million in value. Every site they add, 3 million in value. Every site they add, 3 million.
Homebase.
But what I'm saying is that's why I like it because the story's there. It's there. Where's the risk? Obviously, left field events will come, maybe a nuclear bomb or a meteorite over there. But I think if you're weighing up risk and reward, that's why I like it. That's why I like it. I see 150 on this easy in a couple of years. Look 3 years down the line. That's all you got to do. Look at the business. Don't worry about the share price. Sometimes people are focused on the share price too much. And that's the problem. You shouldn't focus on the share price too much because the share price, going down does not mean you are wrong or the business is in trouble. You need conviction in the stock and not fall in love with it. There's a difference between discipline and delusion. But focus on the business. The share price warrants short-term worries. That's got nothing to do with it. Think about the business 3 years down the line. Is it going to be valued more highly than it is now? If it is, don't worry about short-term volatility. That's the share price. Think about the business. The business, yeah.
Yeah. Absolutely. Yes, boss.
Yes, boss.
Right on.
I'm talking about that on the market. It's volatile at the moment. It's very liquid. It's very liquid, very frustrating. But listen, it's getting better. It grew last year by 23% in a COVID year where they give discounts to agents. Rightmove dropped by 29% revenue. No other portal sort of grew apart from on the market. Now I'm chatting to Jason Tebb.
But that's from a very low base, though, isn't it?
No, but it doesn't matter. They're gaining. No, but they didn't. But they're gaining. Agents and revenue. It doesn't matter. You can say it, but you've probably sold. Have you, Pad?
No, I haven't. I'm just for me with them. So they've got two sets of customers. They've got the agents and they've got ultimately people buying houses. So, but the gatekeeper to the people buying houses are the agents. So they got to keep them happy. So
yes, you love this. Paddy. I had an email from I DM Jason, the new CEO, right? And I said, share price is a bit volatile. What's that? You could be doing a bit of promotion, marketing, stuff like that, because people are asking me. And he said this, yes, all in good time. And he's very measured. He said, listen, I intend to run the business in a totally different way with the emphasis on building consumer as well as agent engagement. And he's been doing that. He's been having meetings with all the agents. So he literally is focusing on the customers, the both ends, the agent and the consumer. So if that's his focus, he's going to do well, isn't he?
Well, I hope so, yeah.
It's just patience.
The agents on that agents chat board that was on the link just seemed ambivalent. They didn't seem particularly excited about it. They didn't seem particularly negative
I know, but let me say, there's two different dynamics here. You are an investor wanting people to be enthused, right? Now, if you go to on the market, right? If you look at their stream, which is the one, Jason will retweet it now and again, Jason Tebb, but they've got hundreds of people saying good things about on the market. You can go to some chat board where you find 3 or 4 disgruntled agents, or maybe they're not. They've got 14,000 agents. They can't get over them all. Jason's only been in for a couple of months. He's working his way through them, but he wants them satisfied. So you're always going to get delusioned agents. You get that with Rightmove, Zoopla, anything. But in my mind, what you're going to look at, that's a sample of like 3 or 4 agents, right? That's not a good sample. First of all, look at the revenue. That's the growth. That's the metric that means more to the share price as an investor.
Yeah. But the reason we got involved in this the story was that they've got a certain percentage of their agents that are on free contracts or free trials. They've got a certain amount that are only paying a certain amount of money. And the big upside on this was that they were going to try and convert some of those to higher paying deals. But if people just don't really care about it too much, if they're getting all of their leads through Rightmove and Zoopla, and those two are so much bigger and so much more useful, so we're about to go into this kind of dodgy period financially. I'd imagine estate agents, if they get asked for more money for a service that they don't really care about, are going to go, we'll just leave it then. See you later.
No, but where you getting that? If you looked, I sent you that chart of the comparisons between on the market leads per month and Rightmove. And it's not a huge difference. At the start, it was like 10 leads per month for on the market and 170 for Rightmove per month per agent, right? And now it's 170 for Rightmove, 146 for on the market. And I've seen people tweeting saying my leads through on the market are a lot higher quality. And so I don't know where you're getting that. And if you're looking at they're paying £1,000 a month for Rightmove, and they're paying on average 133 quid from the market. If you're going to cut money, and literally the leads are better quality with on the market, who are you going to go with? So I mean, I think there's always room. They probably have two portals, but it's whether it's on the Rightmove and Zoopla or Rightmove on the market. And I say it's growth. With any small company, you've got to focus on growth, and that growth means, in my mind, revenue. Look at that. That's all you got to look at. Growth. Growth. You look at that, right? You know?
Well, I think this year is going to tell us a lot. Because he's turned it around now. We actually saw a profit, didn't we, now? So, and from previous, it was like a £9 million loss, I think, wasn't it, the previous year or something? It was huge. So, turn it around, moving into profitability. If you look at Rightmove, it trades at a PE of 45. I mean, if they can get anywhere, near in terms of profit and start pushing their profit up and get the operational side of it, going gangbusters, then if you start looking at P's like that and look at the evaluations, and we're valued on the market is valued at 70 million now or something. So I don't know. I just sort of think if this year, they can continue the growth there, the share price should be reflected, and we should be a lot higher than where we are now.
There's two things here, okay? First of all, they've got a new CEO in. He's going to try his best. This is his thing. He wants to make this successful, right? His reputation's on the line. He doesn't want to come here and fail here. A lot of pressure on him to get this up, right? So he's doing it. He's saying the conversation I've had, and he's very confident that he's working diligently at getting this. And he said he wants to get consumer engagement and agent engagement. Rightmove is valued 24 times its revenue. On the market is valued 3 times its revenue. Yeah. Even if you move up to 10 times revenue, we're talking 230 million market cap here. And we're now 68 million market cap.
Exactly. So 4 times where we are now.
But give Jason a chance. Like I said, this is what I'm talking about: share price and frustrations of business. Focus on the business. You can go around looking for negatives everywhere. Honestly, you can get agents who are disfranchised with it. Of course, you are. You're going to find that there's 14,000 agents out there. But you go on if you go on the markets, social media, you'll see lots of them. They're really impressed with it. So But what do you focus on? I'd focus on growth and revenue growth, because to me that's a telling thing. If people are paying for it, if they are, that says everything to me. That means the product's wanted.
Yeah. And also, we've literally been in this stock for 5 minutes. When did we buy it? 3-4 months ago, something like that. You've got to hold on for.
Got to give him a chance. Give the CEO a chance.
See a longer view of it. Yeah, absolutely. Yeah.
Anything else worth ramping?
That's it.
No.
There must be.
Someone asked me about Illika, and the thing I said, he may sell Illika, you got a small pot, you just start with Illika. And I said, or go for something smaller. I said, yeah, go for something smaller. And someone said, why? You think it's potential in Illika? I said, yeah, but I have the fortune of getting in before it doubled, And so when you have that fortune, that thing, now it's a 300 million market cap. No doubt Illika will go gangbusters, in years to come, but I don't know when that's going to be, and so there's plenty of time. So what I'm saying is there's times where you can get fast, easy money, and that's before a big rise. If you jump in after a big rise, you've missed out on that rise. You need to get in before the big rise, really, sometimes.
But
they still seem to be quite under the radar, because I was Googling them this week, and when you try and when you Google solid state batteries, they don't really come up in searches. Obviously, QuantumScape come up quite a bit, but in fact quite a lot, but not Illika at all.
Well, Illika they got
poor SEO that.
Yeah, they got ICO certification. They got a certificate.
Yeah,
my kids love a certificate when they come home from school, so I know they'll be impressed with that.
Yeah.
But no, they'll get there. And the thing is, this is now looking quite cheap for a solid-state battery thing. It's starting to get... I know it sounds ridiculous, but I mean, if you look at the comparisons around the world, they are cheap compared to things. But I mean, so it's up to you. I'm in this now for hopefully I'm just going to hold it and sit there and forget about it. I want to forget about it because I think it'll do well. I'm not going to worry about the short-term, movements in the share price because I think it'll do very well. But I think if you've got a small pot and you're looking to, double your money, in a short period of time, it's 270 million market cap. They're going to generate 270 million worth of value or perceived value to double. Now, it's a lot easier for a smaller company who's a 10 million market cap to generate 10 million of perceived value and double. A lot easier than 270 million. So, 27.
But the other thing to say with a business like this is that it's had a big move, but it can have other big moves based on news because it lands a contract with big name automotive company and boom, you'll see a massive rise. The difference there between that kind of company and like an OnTheMarket, the OnTheMarket might not have a big move. It will just be a long, steady, hopefully upward trajectory.
The only thing I criticise about OnTheMarket is this, right? And if I get annoyed with it and they do well and the share price goes, it shouldn't jump out of impatience, I know. Is it not unique? Now, I haven't got any IP, and when I look at companies, I look at, they give them a moat a little bit. Do they have any competitors? And they do. And that's the only thing that's the issue with OnTheMarket. But they're growing, and sometimes you have to knock out one of your filters because if they're growing and they're doing everything else, it's fine. Yes, that's really a criticism. But another thing that's frustrating, like the business and the share price is frustrating, and people focus on the warrants, for example, of Gfinity. That's frustrating, yes it is, because you're getting trickles of sales all the time. That will dry up. And I said in that recent video, towards October, the warrants expire. So the more and more will expire, people will exercise those and sell them. So we're going to go through some volatile times, but the share price has held up well considering the big sales have gone through. And I genuinely think this will be one of those stocks that will pop crazily when that sell volume dries up, because there'll just be buy volume, the business is improving underneath, but there's the technical issue of the warrants dragging the share price down. And I think it will pop quite significantly towards the end of this year, towards October, as we get closer. I said that wedge of less selling, where the wedge going up with more buying, and you'll see that dynamic kick in. So don't get frustrated with the share price. It's so easy to do it. It'll rise, come back, but the business is improving.
Are you saying it's a opportunity?
Right, on that note, I think we better leave there, actually. I think that's it, Pete. That's very disappointing. Very disappointing.
He's a wordsmith.
Wordsmith. Yeah. Anyway, one further thing. Steve convinced me last night not to buy a new Mac. I want to buy a new Mac. It was 6 years I've had a Mac. He said, no, don't buy one because they've got a new chip in it.
Your excuse for buying a new one is because it's 6 years old. So that's not a reason to buy a new Mac.
Yeah, but
you didn't get rid of your kids after they were 6, did you?
I know, exactly. But you know what? They've got a new chip, and next year they stop support for the... you can upgrade to the biggest...
next year, isn't it?
The big Jeff upgrade.
How much support are you getting?
No, these big updates. The big Sur was last, wasn't it? I would like the next upgrade to be Fat Jeff. Will you? or Flabby Colin. Our next iOS update is Flabby Colin. I would love that. Or Big Nose Steve. Yeah, that'd be good. But anyway, I'm going to leave now. Has England won any games this year, Pete?
Yeah, we beat France. Hello, last time out. So, see you later.
I can't believe Wales are going to win this. This is absolute joke.
I know.
It's absolute farce.
This is why you don't get. This is why you always bet the underdog on sports, because it's until everyone thought, it's England or France this year, easy. No one. Wales is dreadful performance at the end of the last Six Nations, the delayed version. I don't think Wales took it that seriously, to be honest. But everyone, no one even. You'd be forgiven for thinking that Wales wasn't even in the tournament at the start of the season, at the start of the Six Nations, and then all of a sudden. Look at them.
A couple of dodgy red cards and suddenly you're winning games.
No, you can't put it down to that, can you?
Well, you can.
No, you can give as many red cards as you want. You've still got to score points.
Well, they certainly weren't dodgy red cards. They were
the first two matches against 14 people.
One was dodgy.
The Scotland one was dodgy.
Yeah, that is dodgy.
Can you hear that? That's the sound of bitterness, guys.
No, it's not.
Yes, it is.
It's high-level analysis. What's your prediction for the game today, then?
Wales win.
Right. That's it, is it?
Well, you can't give scores. Someone give you scores. It's like saying, where do you see the share price in this company in 6 months' time? I have no idea. If I knew that, I'd be a billionaire.
Okay. No, so, Steve, what are you thinking?
I've been quite good at getting close to predicting the score.
Yes, Steve, go on.
Yeah.
Right.
I need to think about it more. I can't just throw numbers out there. I need to do the math.
You need to do your research.
Yeah, absolutely.
Steve, no, come on. Your research is what's the ticket. Just give us some numbers.
Okay, let's go 25-23 to Wales.
Oh, it's going to be close then.
Yeah.
But we're going to win. Yes, all right, good. I like that. Cool.
I think France are going to do it.
I hope, and do you know what? Some part of me thinks they are upsetters and disruptors. France. They don't play the. They don't go with the script, do they? Sometimes the French just go with it.
If they could still win the championships, they've got something to play for. So I think they will come out all guns blazing. But anyway, good luck.
Especially losing to England last week. They must be really annoyed by that.
Yep.
Who's lost to England this year? No one.
One or two people.
Right,
Yeah.
boys, I think we've done long enough on this podcast.
Yeah,
I think it's a record long one. It's like 110, wasn't it? Over now.
110.
That's my maths.
Great.
Right, have a nice weekend. Don't forget, ISA deadline's coming up. You can put 20 grand in if you got it before the 5th. So just set up an ISA. If you have not got one, you're investing. What are you doing? Get an ISA going because you can put in 2 chunks of money either side of the financial year. And so that's that. And also, think about joining up the Sharepickers Investment Club because the pre-launch price is going up on the 30th of March. 31st or 30th? How many days does March have? Well,
31.
31. That's it. It's going up. So, and I'm also, it's nice. It's nice. Anyway, guys, have a nice weekend.
Bye.
Bye.
Speak next week.
The Weekend Podcast on Vox Markets with Justin, Peter and Steve. Nothing in this podcast is intended as investment advice and the people in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.